Good morning, traders from every part of the world that you're joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. Feel most welcomed, and we shall dive in. Now, before that, I would like to register to you that this is going to be a pre-recorded YouTube video. Kindly visit the HFM YouTube channel at HFM Kenya. Like, subscribe, and click on the notification button so that you're not left behind on the amazing content that we upload on HFM channel at HFM Kenya from time to time. And you will surely get to enjoy the informative journey as we culminate in our financial growth. So I'll give a 3-second moment of silence so that you can click and subscribe on this video. Good. Now, with that out of the way, our commitment to you is we will keep improving these videos and making them much more interestingly educative, so that you get to enjoy even more and more. So with that out of the way, we go with our routine that has proved consistency in the financial markets, and we begin with fundamental analysis, what has been happening in the fundamental analysis angle. Then we merge it with technicals. Now, fundamental analysis, we have repeated this, and we shall not tire to repeat that. Fundamental analysis is the driving force behind the different assets that we look at here on the daily market morning call, and generally in the financial markets. I'm speaking in every asset class, may it be currencies, commodities, may it be individual stocks, may it be indices, you name them. Now, with that out of the way, fundamental analysis, today is on the 27th, that is on Wednesday. We have, yesterday we had new home sales in the US data coming out, which came out slightly negative, showing that the real estate sector in the US economy seems to be struggling a little bit as we enter into finish the last quarter of the year. Now, the number came out suggesting that the US real estate sector is struggling, which will slightly weaken the dollar. Moving on swiftly, we later had FOMC meeting coming out, and the FOMC meeting coming out was to follow up on the economic status of the US economy. Remember, the FOMC, the Federal Open Market Committee, which serves the purpose as the central bank in the United States, with two major roles. Number one, to maintain favorable employment environment. Number two, to control inflation. And inflation is the prices of goods and services. And that is what the meeting was all about yesterday. No data printed because it was a follow-up meeting on that. Moving on swiftly, today on Wednesday, during Sydney session, you shall notice I'll be focusing on the high impact or high volatility news. During Sydney session, we had the CPI year on year coming out from Sydney, Australia, and it came out the same. It was held at 2.1% here, which is also in the previous month, which is slightly lower than what was anticipated. This will tend to have a rather consolidating reflection on the market. We see a steady inflation, prices of goods and services in Australia are steady, printing data as from the previous month. Moving on swiftly, that will also tend to have a consolidation reflection, number one, and number two, we might see a little bit of weakening of the Australian dollar. right? Because it came out slightly lower than expected, or the consensus right here. Moving on swiftly, we also had the New Zealand Reserve Bank of New Zealand monetary report, which followed up with interest rate decisions, and we see that with the interest rate decision, the actual was printed at 4.25%, with the anticipated or consensus at 4.25%, with the previous at 4.75%. Now, what does this mean? This means that the New Zealand dollar is slightly going to weaken because the actual came out lower than the previous, right? It's good to indicate that. As we also move into the future, today we expect quite a number of impact news, and as they come out, we shall be updating you from time to time on our social media platforms and the implication of this on the charts. Now, moving on swiftly, you can go on the charts and get to see this in real time. Very nice. So, beginning with our issue suspect, we begin with Euro USD. Go to our lower time frames to see what's happening. Now, yesterday we had somewhat closed in a doji, which means indecision, suggesting that neither of the two currencies was outpowering the other one. So indecision or doji would be indicated by this candle printed in this fashion right here. But as we move into today, some of the expectations, if we go in a lower time frame, we kind of see consolidation. Price is neither moving up or down. Let me clearly indicate it. We are kind of moving in a range. We want to see breaking out of this range to give us much more suggestive directional bias. And how will we notice this? We shall notice this if, just returning there, if we see significant high, this one being taken out, or a significant low, this one being taken out, for it to indicate whether we're bullish or bearish. Fundamentally speaking, the USD is slightly stronger than the euro, and this is following up from the Bank of Europe cutting interest rates at a much more faster rate than the Federal Market Open Committee of the United States did. So we would like to see it break the low for it to confirm the bias fundamentally, and for us also to marry it with technicals. Moving on swiftly. For GU, we see GU broke the support level at 126,100, suggesting that we would be moving to the downside. But see, guys, also GU closed yesterday with a doji, this candle right here, with a small body and almost equitable wicks from the top and the bottom, suggesting that neither the Great British Pound or the US dollar was strong enough for yesterday, but we see it retest support level, which now flips to be a resistance, suggesting price would be moving to the downside. If you go on a lower time frame to see those expectations, we go to lower time frame than the daily, which is the 1 hour. In this case, we see the first retest here, the second retest here. Now we would want to see taking out of this low, suggesting price movement in the downside. Moving on swiftly. For AUD USD on the daily time frame, we see we are holding off from the 0.64713 support, key technical level here. We would like to see price breaking major lows to suggest the strength of the USD over the Australian dollar, so as to marry the expectations of fundamentals, and we see we are kind of consolidating. Remember, guys, this is the last quarter of the year. We are likely to observe these scenarios as we get into the month of December, where we see low liquidity. But times in the recent years, we have seen, for example, on the Black Friday, where we have more deals especially in the e-commerce sector, injecting liquidity and prices moving with much more aggression. But as it is right now, we see that we are in kind of consolidation phase, but would like to see lows being taken out so as to suggest the dominance of the US dollar against its peers. So would like to see this low being broken for it to suggest movement of price to the downside. On the flip side, if we monitor this high being taken right here, price breaking above it, it might suggest that the Australian dollar is strengthening over the US dollar. For USD CHF from a higher time frame, first we see we are retesting perfectly this support. Data suggests that we should break this resistance and price movement to the upside, so we would like to patiently wait for that, suggesting the US dollar dominance over the Swiss franc. If we go to a lower time frame to see what is happening, we see that we are creating lower lows, but we are in kind of support area right here. So we want to see either bounce off from this to take out this high to confirm our bias. And wait a minute, guys, we also see a gap here, a gap, a space without printed candles, suggesting there was bearish momentum as we entered into this market. Like we said in the beginning of the week, 48% of the time, from a chartered market technician education, this should be filled. So like we saw in the previous daily morning market call sessions, where we saw this being filled. So once this low comes and take out this high, it would be a suggestion that price would come and fill it as we move up to retest, to come and retest or break out of this 0.8463 area of resistance, which will flip to be a support. In USD JPY from a higher time frame also, just a minute. USD JPY, we see that from a daily time frame, the Japanese yen has been recovering from the United States dollar. Again, like we said yesterday on this series, the Bank of Japan released data to suggest that the Japanese yen is doing better. So intuitively speaking, if we were to get in for shorts, go to a lower time frame, we see it's in a steady, sharp, bearish momentum. So we'd want to see it retrace a little bit into premium. This is what I mean. Retraced a little bit into premium for us to get in and continue riding for the shorts to the price moving downside. All right. But in case you get to jump in at this particular point, remember to don't put a tight stop loss so that you have a breathing room of price, suggesting to price to move in a downward trajectory, marrying both technical and fundamental analysis. For USD CAD, we have been in an upward trajectory. Speaking from a daily, we see that the 1.39909 key level or resistance was broken, and it has been retested with a fake out, and price broke above it. That is yesterday. Reason, fundamentally speaking, the USD has been having a field day or outpowering the Canadian dollar as compared to the currencies pair that we have looked at, because yes, the day before yesterday, Trump suggested, the incoming president of the United States, Trump suggested that he is going to impose a 25% tariff on the taxes on imports. Tariffs are also taxes on imports from the Canada, Mexico, and China. So this will tend to have a strong surgence or give impetus or power to the USD. That's why we see price playing out this much. Would want to keep riding on the buys. For GBP JPY, again, the Japanese yen is having a field day on the Great British Pound, breaking lower lows. Go to a lower time frame. We see it is in a steady, sharp bearish momentum, which would encourage us retail traders to get in for shorts, but for safe entry, a little bit of retracement to premium levels so that it keep moving to the downside would give us a much more high risk to reward. For gold, precious metal gold, yesterday we indicated that we have had talks happen between Israel and Lebanon to end the war on the Lebanese front. You know, Israel is fighting both in the Palestine through Hamas and Lebanon through Hezbollah. Hezbollah and Hamas are militia groups, which Hezbollah fighting from Lebanon and Hamas fighting from Palestine. Now, on the Hezbollah front, which is in Lebanon, there have been talks which have been brokered by the United States, outgoing government of Joe Biden. And we see that Biden has today in the morning successfully got them to sign a deal which will stop the war in the Lebanese front, where we see Hezbollah, and you shall see the Israel military pull out of that zone. Now, this is why we had this sharp bearish momentum as investors went into much more riskier spaces, you know, like indices, stocks. Reason is because fear has been lessened in the financial markets. We saw it creating lower lows. There was a sharp sale here, but right now we see that it is retesting the 2604.16 area of interest. Why is this? Is as one side of the world is going into talks. Remember, on the left, there have been talks to have a ceasefire between Israel and Lebanon. But on the other side, we see Hamas not in talks yet, although we see the president promising to also have a conversation with them so as to cool the tension, right? But on the other part of the world, we have another war continuing, which is the Russia-Ukraine war. And we see yesterday night, it was reported that Russia had a wide-range drone attack on Ukrainian soil, which could be the reason why we see movement of price now to the upside. All right. It is important to note that the Russian-Ukraine war was said to take 15 days when it began 3 years ago, but we see now it is on February it is going to be clicking 3 years, so it is taking more time than expected, and that's why we have been having these phases of attacks, retreats, military re-strategizing. But our work as retail traders is to find a way where we can benefit from this data and be able to make a profit out of it. So currently, the Russian military has attacked Ukraine fronts, and yesterday it launched by far the largest drone attacks, which could explain the movement of price now to the upside, right? Remember, guys, to observe risk management as you engage the financial markets. And by any chance, this is not financial advice. This is purely meant to inform for educative purposes, and you do your due diligence. And remember to trade also with a reliable broker. HFM has proven consistency in being a reliable broker with regulation in the territories or countries that we have gotten into: Kenya, Tanzania, Uganda, South Africa, Cyprus, United Kingdom, and with favorable products which will give you a much more suitable financial journey as you grow into creating an investment portfolio with 24 hours support to make sure that we put our clients first. So guys, see you tomorrow, the same place, the same time, to do things the same way that has proven consistency. Until then, take care and God bless.